Hello everybody and welcome to this Patreon requested video, one of the most requested videos of the channel actually, about a stock that I find very hard to analyze. This stock is complicated. There's a lot of things that I like about it. There's one thing that I don't like about it, which is it's a Bitcoin miner who doesn't like to hodl Bitcoin. That's the one thing I don't like about it. But I think this stock has a lot of potential, and I own it. I own quite a few shares of IREN, not my biggest position in any way, but I own it, and I've benefited from the rise recently. I'm happy. But the question is, what's going on with IREN? Is IREN still undervalued? What am I doing with IREN? Am I adding? Do I prefer Riot? So let's go ahead and let's go through it. And you'll see this is not an easy stock to analyze by any means. This was a complicated deal to put together. Anyways, so what's going on? They're pausing their mining expansion. They're done at 50 exahash. And then after that 50 exahash is reached, they will fully focus on AI opportunities. And my guess is that they will let those miners lose their value, depreciate, until they hopefully replace every single data center by AI compute and AI workloads. And they're pausing that expansion, and they're doing the full shift of AI, the full shift going towards AI HPC. It's probably for the better, because it seems to me like they never believed in Bitcoin anyways, because they were selling it. And there is really two stories to this, one long-term and one short-term story. The short-term story is, what are they going to do with Childress, and how much money are they going to make with Childress? Are they going to be able to contract Horizon 1, which is the site that they're developing on Childress for high-performance compute? Are they going to be able to contract it to a good client, a good hyperscaler, which is then going to lead to a re-rating of the stock? And then more long-run, what are they going to do with Sweetwater 1, Sweetwater 2, which is their new data center, which is all the way out in West Texas, which they hope to be an enormous 2 gigawatt hub in West Texas, energized in mid-2026, late 2027. This is really going to be the story going forward. These two sites is going to be the story going forward. But before we even talk about the future story, and sure enough, a lot of valuation probably hinges on the success of these two developments. This company has a past, and the past is Bitcoin mining, and we need to talk about that Bitcoin mining past. They are one of the best Bitcoin miners, and as much as they don't like mining Bitcoin, they are actually one of the best at it. And one of the reasons for that is they have a very efficient, very modern mining fleet at 15 joules a terahash. And they're done after that. So the Bitcoin mining, it increased year over year compared to the last year. It's going to keep increasing. And they're done probably June 30th is probably when they will be done with that 50 exahash total capacity. If you look at this past quarter's adjusted EBITDA, so mostly mining revenue, and then, of course, mining cash flow. EBITDA is a proxy for cash flow. A little bit of AI cloud services, but it's really meaningless. This is really mostly mining right now. They did 83 million for this prior quarter. They have 184 million in cash. Their margin on mining is 58%, based on, assuming a difficulty increasing a little bit, which would mean their cost of electricity would be $45,000 all in cash cost, right? Not just electricity, but more. And they would sell it for 107 in the open market. So 58% gross margin. They're essentially acquiring a Bitcoin half price. The reason why they're able to do that is because they have very cheap power cost. The power cost is 3.3 cents a kilowatt hour. That's valuable when you're able to pay power so cheap for a site so large, for a capacity so large. In the future, they will have 750 megawatt. They're on the verge of having 750 megawatt. When you pay so little for so much electricity, that's your competitive advantage. That's your power. But they want to direct that power towards the most efficient use, and they believe the most efficient use is AI and not Bitcoin mining. But nonetheless, we have enough data to calculate what's going on, to calculate how much they're worth. So and how much are we paying? And we know, so we know expansion of Bitcoin mining is going to be done by June 30th, in 2 days. In 2 days, they're done. So we're going to assume for this calculation, they already have 50 exahash for the calculation forward. right now, let's just look at the prior quarter. So let's assume they repeat the 83 million of adjusted EBITDA. Let's assume they repeat it times 4. So that would be, 330 something million of adjusted EBITDA of cash flow. And they have a market cap of 3.14 billion. So right now, if you just take the trailing quarter, the last quarter, and you analyze that, so you 4x the last quarter EBITDA, and you divide price by that quarterly EBITDA 4x, then you get a price to adjusted EBITDA of 9.4. That is, I'm gonna say, dirt cheap. It's borderline just cheap, but I'm actually gonna call it dirt cheap. Why? Because they're still expanding this month, right? And we should use 50 exahash. And so if you look at their illustrative adjusted EBITDA, and frankly, they do the same thing that I've done for them on prior video, which is they go on a Bitcoin mining calculator or a Bitcoin mining calculator, and they calculated how much profit there would be. So you can read in the footnotes here, they give you their input that they put into CoinWars to do the illustrative EBITDA. And I agree with that number. The illustrative EBITDA, so annualized instant on June 30th would be 588 million of adjusted EBITDA at 50 exahash. And so if you assume that in 2 days, that's what they're running the Bitcoin at, and you assume the difficulty doesn't move up too much, the difficulty stays flat, you assume those miners that were taken out in the Middle East don't get restarted or anything, that really helps the mining difficulty, by the way, a little bit. So you assume that, what do you get? You get 3.14 billion in market cap divided by 588 million. That's a 5.3x price to adjusted EBITDA. This is very much dirt cheap. This is usually the price to EBITDA that you find for companies that are about to fail, for companies that are about to go out of business. I can think of, a failing auto company, for example, a failing industrial company, a failing retail company would have price to adjusted EBITDAs like this. There is something the market is not seeing in this company for the market to grant it such low adjusted price to EBITDA. Of course, if I was looking for a cash cow, I would find this very interesting, but I'm a growth investor. I don't really care about cash cow. I believe cash is trash. I believe in Bitcoin. Therefore, to me, what matters is the future of this company. It's what is their potential? How much growth are they going to have in the future? That's what matters, and I think that's where most of the valuation resides, and I think that's where most of the mispricing for IREN actually resides. IREN is mispriced. And so the best type of analysis, in my view, to analyze stock like IREN is not price to EBITDA. It's not to put a multiple on cash flow and put a multiple. I don't think that's the better way to analyze it. I think because IREN is so misunderstood, the better way to analyze IREN is sum of the parts. I've done that before. Doing sum of the parts analysis on IREN it's a mess. But we're going to try to do it anyways. So it's a question of price. What composes the market cap? And we got to realize, most of this price to EBITDA is not based on actual goodwill. It's not based on some intangible. It's earned on actual tangible assets with market prices. This is not money they're earning on their brand, right? This is money that they're earning on actual tangible assets. If you remember my prior videos on miners, I would take enterprise value and I would adjust them for say the Bitcoin bag, the Bitcoin hodl bag. And in the case of IREN, they don't have a hodl bag, so I could adjust them for the value of the miners. So let's talk about the value of their miners, and you'll see so we start this analysis with 3.1 billion in market cap, and we're gonna remove value, and we're gonna see if we can get to a negative market cap, which is not possible, which would tell me the company is undervalued, highly undervalued. So they have 50 exahash of Bitcoin mining hardware equipment. They bought it at the right time. It's efficient at 15 joules. Okay. The brand new Bitmain miners, which nobody has right now, are at 9 joules. But at least when they bought them, that was the best of the best. And it's still, so much better than Mara. I think Mara is something like 23 joules per terahash. So this is excellent, 15 joules. So let's calculate. Luckily for us, these mining equipments, and by the way, IREN mostly has S21 Pro Bitmain miners. These mining rigs, they are quoted, almost publicly quoted. There is a price for these rigs, and so Bitmain does that. These are the Bitmain futures. They tell you each rig right now trades at 16. These rigs at 15 joules of per terahash, they trade at $16 per terahash. So let's do the math. 1 exahash has 1 million terahash. There is 50 exahash times a million times $16. That means they have about 800 million of worth of hardware of S21 Pros, which they can sell on the open market. There's a market for this. So perhaps we need to remove that from the valuation, even though they make a lot of money for IREN right now. That's still a lot of money. That's a lot of compute. These machines depreciate not nearly as fast as the GPUs. GPUs depreciate much faster than these machines. I estimate these machines can walk for maybe about 7 years before it really becomes totally unprofitable. And it all depends on the cost of your electricity. As I've highlighted before, people are always quick to dismiss that. But in my view, my analysis of Bitcoin miners, about 20% on top you gotta add. So if it's 800 million of mining hardware, you gotta add 20% on top for things like the transformers, the buildings, the fans, the switches, the network blades. There's a lot of highly specialized equipment that surrounds this, and the transformers don't really lose value very much. In fact, they gain value. If you follow Elon Musk and his plea for having more transformers in the world, and transformers being the real bottleneck, they in fact could gain value. So I'm willing to add 20% on top of the 800 million of hardware. So let's call it the mining equipment. They have 960 million of mining equipment. Of course, the bulk of that money, the 800 million, is trending towards zero, but it's trending towards zero over the long run. And I estimate they have 4 to 5 years where they can still use that equipment. They've depreciated the 2 good years. The 2 best years are behind that equipment, but they still have 5 more years, right? That's the Mara playbook. Keep using the old equipment. And then you have 160 million worth of transformers, cables, all that kind of stuff. That kind of is going to retain its value. But short run, and this is the big point about the miners, short run, if we have a big spike in the price of Bitcoin, like assume Bitcoin, say, moves to 150 in a matter of months, the direction of the value of the mining equipment for all of the miners, and IREN included, that direction is still going to be up over the short run. Over the short run, mining equipment is highly sensitive to the price of Bitcoin. So long run, this is going to trend towards zero. Short run to medium run, this actually correlates to the price of Bitcoin. And sure enough, if the price of Bitcoin dropped to 50K tomorrow, which I don't think it will, but if it did, you would have that really quickly. So that's the risk for you. There's leverage medium to short term on the value of the miners, but I nonetheless assign them a value of 960 million. And of course, if you are interested in IREN, you probably don't really care much about Bitcoin mining. You probably care about one thing and one thing alone. It is Childress. Childress is the data center that everybody needs to care about if they are looking at IREN, because they are building on Childress. They are building a next generation GPU, liquid cooled, 750 a megawatt, well, eventually, right? But it's going to be 50 megawatt to start. But they're building this giant facility, 75 megawatt for Horizon 1 out of the 750 megawatt for the whole site. That's this little thing that we are building on the site. And you can see phase 1, 2, 3, 4, and 5. This is all Bitcoin. And you recognize Bitcoin facilities because they are in lines. They are typically big rows of miners put in line with fans on top of the middle of a common aisle anyways. But you can see they're moving towards data center, and they're going to have 75 megawatt of a liquid cooled data center fully dedicated. And of course, with the hope, and that is my view on this, eventually, as there are more customers, the hope is to build out. I mean, they might keep the Bitcoin miners on site as long as possible because this is a big site. This is a 400-acre site, but the hope is going to be for them to build perhaps an Horizon 2 and an Horizon 3 and slowly shift that power towards the more expensive, the more hopeful AI HPC compute. And so the question is, how do we value childress? How do we do that? Well, it's tough, but we have to realize one thing is the fiber. And of course, my video on Riot that I did on this, I praised Corsicana, the Corsicana site for Riot, which is very close to Dallas. They're much closer to Dallas, even though that is the population center that they're targeting with that giant data center. But they have high latency. The latency is very good. They have fiber, they have high latency, and so that means that a portion, and this is key, a portion of a data center could be used for inference. And a lot of pundits argue that inference is going to be the bigger play than AI training. AI training is more spotty. It's not as reliable as AI inference. And so if AI inference is going to be the next big deal, it seems like the childress site is going to be able to make money on inference. And so therefore, kind of acquire, more high-end customers. The question is 750 megawatt, eventually potentially being fully AI data center, moving away from being a Bitcoin miner. How much could that be worth? And this is a question that, tears, I think, a lot of investors. A lot of investors don't know how to do this. I don't know how to do this myself. So what's a Bitcoin miner who wants to get out of Bitcoin mining and get into AI HPC? What's the best comparison for that? Well, the best comparison for that is Core Scientific. Core Scientific has had a tough history. They've had a hard time with Bitcoin mining. They didn't handle well the crisis, the 21 crisis. And if you go on Core Scientific's website, you will have a very hard time figuring out it's a Bitcoin miner. You have to go at the end of an investor presentation to figure out that they are still mostly a Bitcoin miner. Core Scientific is a Bitcoin miner who identifies as an AI HPC play. It's perhaps the most advanced company who does that. But make no mistake, if you look at Core Scientific, if you look at their facilities, granted a little more spread out than IREN, but that's not necessarily a good thing. I mean, look at how CleanSpark is getting criticized because they have a lot of spread out facility that they have to travel to by private jet, etc. But anyways, if you look at Core Scientific, most of their sites, they're in the country, and most of their sites, you can tell, based on how they are built, you can tell most of their sites, see Pecos, Texas, that's pretty obvious, Muskogee, Grand Forks, essentially almost all of them are Bitcoin mining and mining Bitcoin. And sure enough, if you scroll down all the way down to their investor presentation for Q1, you can see the revenue mix. Their revenue mix for Core Scientific is 84% mining. So if a company has 84% of the revenue coming from self-mining, in my view, that's still a Bitcoin mining company. But Core Scientific is important because Core Scientific is a Bitcoin mining company who identifies and who is trying to become an AI HPC company. And if I look at the valuation of Core Scientific, the valuation of Core Scientific is nearly 5 billion, 4.96 billion. Now, keep in mind, I do want to say this spike was due to an article from the Wall Street Journal. So depending on how much credit you place on the reporting of the Wall Street Journal, and you know how I feel of this channel, you may remember my rant video about Elon quitting Tesla and denying them still running the story. So maybe the valuation of Core Scientific is more like 4 billion, because a lot of the spike was due to an article in the Wall Street Journal. How much do you trust it? That's the big question, right? But anyways, let's assume that story, I don't know what it would be. Let's assume that story is right, and let's assume, because it's better for us, right? If that story is right, it's better for us shareholders, right? So let's assume that story is right, and let's assume it's actually worth $5 billion for IREN. Well, IREN has 900 billion of gross capacity that could be used. It's not right now, but it could be used for AI HPC. And IREN, to the valuation of IREN, we need to remove $384 million. We need to remove that because I removed it for IREN 2, for Core Scientific. For Core Scientific's valuation, we need to remove 384 million. That's roughly what I value their exahash at. Their 20 exahash, their mining equipment, I value it at 384 million for Core Scientific. So when it comes to Core Scientific, let's say they have a 4.98 billion valuation. You remove 384 million worth of hash equipment. That would mean that right now the AI hopes of 900 megawatt of capacity for HPC hosting, those AI hopes are worth $4.5 billion. $4.5 billion. And so let me just go back to IREN and do simple extrapolation. 900, and again, so we go back to IREN. We start with a 3.1 billion market cap. We remove 960 million of mining hardware. And now we gotta remove the value of Childress. And let's assume I value Childress like the market values Core Scientific. Okay, the market values Core Scientific 900 megawatt at 4.5 billion. So simple extrapolation. Childress has 750 megawatt. Let's use the same valuation. Let's do a simple 2 by 2. Let's do a simple multiplication. What do we get? We get Childress potentially being worth 3.8 billion. 3.8 billion. Using that same pro rata, right? Because of course IREN still is mostly a Bitcoin miner. And using that same pro rata to value the Canadian assets, the Canadian asset 160 million. I'm using the same pro rata, and feel free to decide for yourself whether you think the market is exuberant or not, whether you think it's too much of a value or not. A lot of people think Core Scientific as exuberant valuation, so feel free to adjust. But I'm generally bullish on this channel, and I'm always the same amount of bullishness. So you can adjust me down or adjust me up, depending on whether you're more or less bullish than me. But let's assume the Canadian data center, 160 megawatt, worth 850 million. 15 million. So 850 million. So what do? I begin today with IREN, 3.1 billion market cap. I remove 960 million of mining hardware. I remove 3.8 billion of value for Childress. I remove 800 million of value for the Canadian operations. Sum of the parts analysis, I now get to a negative sum of the parts. I get to and it's not possible, of course, but I would get to a negative 2.5 billion. Not market cap, more enterprise value, but this is not how you calculate enterprise value right now, so, and anywhere. So I'm going to call it adjusted market cap of minus 2.4 billion. So, of course, it's impossible, but you understand why IREN and a lot of the miners, except CleanSpark maybe, but a lot of the miners, if not most miners, have Core Scientific envy. They all want to be like Core Scientific or like CoreWeave, or Nebius is slightly different, but like CoreWeave or Core Scientific is what they aspire to become. But the story gets better for IREN, and this is, so I'm gonna compare in a second. I'm gonna compare IREN to Riot because Riot as a similar great story with the Corsicana site, and so you could think, oh, IREN is a Bitcoin miner with the Childress site as optionality. Riot is a Bitcoin miner with a Corsicana site as optionality, plus the Bitcoin hodl, which is why I like IREN a lot, which is why I like Riot a lot, because they hodl the Bitcoin. But IREN as an oversweetener, and it's sweet water. It's not a play on words, but it's sweet water. It's the sweetener. It's the thing on top, and of course, only the most forward-looking investors will start counting in the value of Sweetwater, but it seems like they've been able to secure some pretty impressive power access over there. Both sites, 2 gigawatts. 2 gigawatts for both sites they've been able to secure. And since cheap electricity is poised to be the most valuable asset of the future in a data-driven future, in a GPU data-driven future, that's one of the most important assets. And it seems like they've secured that much power, 2 gigawatts. And so this is the wild card. What is the value of Childress in 2 years? I have no idea, but Childress is twice as big as the size of the current enterprise. Twice as big as the size of the current enterprise. So, and you see, it looks like they're gonna have fiber in there. Now it's fiber between both sites, so let's be careful here. It's not I don't know what the fiber situation to a big population center is, but it's in West Texas, so it's kind of the middle of nowhere. So this may be more valuable for training than it would be valuable for inference. But who knows how good satellite internet is going to be 2 years from now, right? Who knows how telecommunications is going to develop? Who knows what type of compressing technology, what kind of encoding technology we get? I mean, at the end of the day, energy is energy, and compute is distributable, and that compute will be able to stick to cheapest electricity and to be distributed. And so this is a wild card, but this is a major sweetener in my view. And I think a lot of the people who are much more bullish on IREN than I am place a lot of hope on sweet water. So anyways, what's Sweetwater worth once developed? Is it worth the same as Childress? Is it worth more than Childress? Anywho, how much is it worth right now? Is it right now worth, as much as Childress? I really don't know. I think it's worth in the billions. I think in a few years it could be worth multiple billions. Why not 3 or 4 billion? So when I look at IREN, I'm looking at a stock that could potentially be $10 billion in a little time, maybe 3 years, maybe 2 years. It's not scientific. It's just a sum of the part and looking at how valuable this much of a power access is. And if you've been following my channel on over a long time, you may remember me going through gigawatts and like how big of a city is a gigawatt. It's pretty darn insane, that power access. So anyways, all based on this math, I'm confident owning this stock. I like this stock very much, but I can't tell, right? I can't tell if it's just a hold with a very, very nice margin of safety, or if it's a 10x. It's very tough to tell because it's very blurry in my view. But I do see things that I like. For example, I much prefer them raising funds via convertible debt. You can see that convertible debt, of course, they will not repay. Of course, they will repay that debt if the company survives via dilution. So what is convertible debt, right? It's future dilution. This is dilution that will happen in 2029. That future dilution will be done at 30% over today's stock price premium. So I would argue that that's pretty darn accretive to do that. You get the money today, you dilute later. This is very akin to what most Bitcoin treasury companies do. Note that they have a capped call transaction, as is usually the norm, so they are edging the dilution in case the stock really explodes for IREN. They're edging that dilution for their investor. More importantly, when I look at their behavior on dilution, they've been wild, they've been crazy, but not the past 2 quarters. The past 2 quarters have been okay, and the CEO on the conference call said that they're watching for the dilution, and they're doing everything in their power to limit that dilution. Hence why probably that convertible debt, which really postpones the dilution to 2029, granted at a higher price, but they have a capped call transaction. When I look at the capital structure, I can see that they've grown, of course, mostly through dilution because the debt is not that high. So well, now you got to add 550 million of debt, but really, what's the nature of that debt? That debt is really future dilution. So does it really count as debt when the coupon is 3.5%? No, we should probably count it as dilution. We should probably project the dilution and show the dilution in a 2029, but who projects dilution 5 years out, right? So it's counted as debt. It's going to be counted as debt. So it's going to show as 800 million worth of debt. So get ready for people telling you, oh, this company has a lot of debt, etc. Even $800 million worth of debt on a company like this would not be too far-fetched. In fact, a lot of these data center companies have much bigger debt, especially the REITs. If you look at the REITs, they have a lot of debt. So I'm not too concerned by that. I'm pleased to see the CEO wants to diminish the dilution. Keep in mind that I'm only pleased because I know they sell the Bitcoin, right? If they kept the Bitcoin, if they held the Bitcoin, I have a very high tolerance for dilution whenever a company keeps the Bitcoin on the balance sheet, because that's how you accrete. But they don't keep the Bitcoin here, so you don't accrete as much, or you accrete in a riskier fashion, because yes, you accrete in the form of data center tangibles, but we don't really know the future value of those data centers. There's a lot of business execution risk, right? Bitcoin has no business execution risk. Bitcoin is a commodity. It's a macro risk that you take on. So I much prefer that, of course. So I'm bullish. This is my 5th time covering them. I'm bullish. This is a position where it would go to 0 for me. It would hurt, but that's definitely not a top position either. Keep in mind that the price to EBITDA alone on this one could justify owning it. And if you add the price to EBITDA plus the sum of the parts analysis that I just did, you have two clues that the stock is cheap. Two different clues. Add up the value of everything they own. Clue number one, just calculate price to EBITDA and just value them as an operating company. Clue number two, I wish they had clue number three, which is you own a lot of Bitcoin on the balance sheet. They don't. And so this is the key question for me. This is why I tend to prefer Riot, because Riot has Bitcoin on the balance sheet. I explained this in this video. Now, I realize that I might be on my own on Riot, and I'm fine. I'm fine being on my own on a stock because this video got very little views. So I it's a matter of Corsicana versus Childress, and for me, as far as optionality, what do I prefer? Do I prefer a hodl bag, or do I prefer Sweetwater as kind of a sweetener? This is essentially the sweetener. The sweetener for IREN is Sweetwater. The sweetener for Riot is the hodl bag and the wild card of what Bitcoin may do. Regardless, the performance of IREN has been better than Riot in recent months because IREN has had the spotlight, but Riot has been doing fairly well anyways. I also own Mara. I also own CleanSpark as miners. CleanSpark is kind of a question mark for me. Mara is a stock that I like very much, but I don't own Mara because of mining, right? I own Mara because it's trading at a price to NAV below 1. So it's kind of a Bitcoin ETF, cheaper than a Bitcoin ETF. That's why I like Mara very, very, very much. And you get their power access also for free. Don't fade out Mara. Mara also has access to very cheap power. All in all, this bodes very well for this sector in general. I think there could be a lot of case to be made about just buying a Bitcoin miners ETF and be done with it. Also, because this bodes very well for this sector. That power access that those miners got in the bear market of late 21, 22, in that bear market and before in former bear markets, that power access is now proving to be extremely valuable to another player. And I think, I think it's right to say that the Bitcoin miners could perform very, very well in the future because of the power access, and the power access might be a much greater part of their valuation going forward than their actual Bitcoin mining operations. So I like the stock, and I hope you like this analysis. So anyways, this was not financial advice, not investment advice ever on this channel. This channel is only entertainment. I am an entertainer. I hope you are entertained. Please like, please subscribe, follow me on Patreon, follow me on X. Thank you so much for watching, and have a wonderful day.